Muy buenos días. Muchas gracias a todos por estar con nosotros hoy para esta conversación que hemos llamado Finding the Signal, Understanding Bitcoin and Deflation. Vamos a estar entrando en conversación con el autor Jeff Booth en un minuto. Antes de comenzar la conversación, quiero reconocer primero a la ULID, agradecer a la ULID por facilitar esta conversación. También a CAMTIC, la Cámara de Tecnologías de Información y Comunicación, por copatrocinarlo. La ULID cuenta con programas de formación en criptomonedas y blockchain. Nuestro docente Nancy Quiroz es quien nos facilitó inclusive el contacto hoy con Jeff Booth. Y del lado de CAMTIC, CAMTIC cuenta con un capítulo de empresas del sector de FinTech. Entonces, si quieren conocer más sobre los programas de la ULID, sobre el programa de criptomonedas y blockchain, o bien conocer más sobre la Cámara de Tecnologías y el capítulo de FinTech, aquí estamos nuestros asesores aquí de la ULID y CAMTIC para ayudarles. Bueno, sin más, voy a introducir a nuestro speaker. En este momento voy a cambiar al inglés. No tenemos en este momento como la traducción simultánea aquí en el Zoom. No estoy seguro si del lado de ustedes como quienes escuchan, si tienen la capacidad de encenderlo, pero voy a estar pasando en inglés en este momento para que conozcan. Al final de la conversación vamos a tener un espacio también para preguntas y respuestas. Si quieren hacer las preguntas en inglés o en español, también puedo ayudar a facilitar la traducción. So let's kick it off. I'm going to introduce our speaker, Jeff Booth. Jeff is an entrepreneur, a technology leader, an author, and a strategic advisor. In 2015, Jeff was awarded the Person of the Year by the BCTIA Technology Impact Awards. Moreover, in 2016, Goldman Sachs named him among its most intriguing entrepreneurs. And currently, Jeff is a partner of the fund Ego Death Capital. Jeff is the author of The Price of Tomorrow, Why Deflation is the Key to an Abundant Future, in which he argues that technology is moving at a very fast pace, and its deflationary nature hasn't permeated through every level of society because we live in a debt-based economic system. It only works as credit expands. So with these two opposing forces at play, we need to build new frameworks that allow the benefits of technology and the abundance it creates to manifest. We're going to talk about this thesis with Jeff, but before we get into that, Jeff, good morning or good evening. I don't know where you are. Where are you today, Jeff?
I'm in Vancouver. Good morning,
You're in
Paul.
Vancouver, so good morning. Yeah. I think we're just like an hour ahead of you maybe right now. So thank you so much for being with us today. It's really a super great honor for us here at the ULID and CAMTIC to welcome you and talk about your reflections on the impact of technology and economic forces. But before we do that, why don't you tell us a little bit about yourself? Where do you come from? What are you doing in Vancouver? And what is a bit of your history in business and finance?
I think you gave a decent. So I've always been an entrepreneur. And interested in where the world's going and kind of seeing what people believe, how things work, and if you could solve problems in a different way and provide more value to people. So that's what I would say I've always done. And that has led me through kind of the waves of technology and created quite a number of successful businesses in technology. And today I'm on board numerous boards, technology company boards, and I started a fund building on top, or that funds companies building on the top of Bitcoin, the ecosystem that's coming, the new rails of commerce that are coming forward. So actually, arguably, most of my time isn't spent in Vancouver anymore. Most of my time is spent around the world, but this is home base.
Great. So just before we get into talking about your thesis from your book, there are a few things going on in the world right now that we can't not talk about. The elephant in the room is the bank failures, starting with the Silicon Valley Bank. There's a concern about, is this something that's going to spread to others? But just the fact that this started in that bank, what does that tell us about the nature of financing innovation and technology and this idea of kind of a credit-based system?
Yeah, so I would say nothing of this is a surprise if you've read my book. We live in a system. So, and I think where I'll start here, and maybe there might be some people even in your audience that would naturally push back against that thesis. And that's because of our model of the world that we've always lived in. We try to attach new information to make our model work instead of rely on what is that new information telling us. And so I have to start at a higher level than what you just asked to be able to kind of break through that paradigm for people. And everybody knows, I think virtually every economist knows that prices fall to the marginal cost of production. It's a known economic phenomenon because the as people compete in as prices fall, they reduce margins or they find better ways to solve problems, and prices keep falling. For the same reason, we don't pay for our oxygen that you're breathing right now, and you only pay for oxygen underwater. Prices fall, or in space. Prices fall to the marginal cost of production everywhere. So why the calculator app on your phone is free? It's why the photos on your phone are free. And we used to pay for those things in a different world. So prices fall to the marginal cost of production. You can regulate an industry for a while to slow that down, but eventually, if you do, then what ends up happening is that advantage moves to another nation, and it falls there and then attacks your regulated industry from somewhere else. So over the long term, that's what happens. And technology is moving faster and fast. It's moving exponentially on a path to actually make that happen faster. So the rails of everything, if you looked at GPT, or if you looked at anything, prices fall to marginal cost of production, and the marginal cost of production is falling immensely everywhere. So it raises a question. So that, and by the way, so it raises two questions. That means if that happens, we should be enjoying our time more as we work less and we get more. That's the way the world should work. But our existing financial system has approximately $400 trillion of insolvent debt. And so that insolvent debt, the only way to pay it back is through higher and higher inflation. And so prices move up because if you allow deflation from the existing system, the entire system collapses. And that entire system is the life we measure everything by. So so what's happening in Silicon Valley Bank, or any bank, this is just all counterparty risk spreading around. Like, and some of the numbers just to make sure people, it takes approximately 32,000 years paying back a debt at $1 a second to pay back 1 trillion. Yet we have $400 trillion of insolvent debt. So how could productivity that reduces prices and makes the debt more expensive to pay back possibly can be congruent with that system? And that's where you see the conflict. But people are working harder and harder inside that system, making that system worse. And it's literally based on, I wish it wasn't, but it's based on, it's just based on manipulation of money.
So obviously a few years ago now, in the US market at least, the Fed first tried to fix this a little bit, the Dodd-Frank. This is, the financial collapse. That worked for a while, but then they also lowered the interbank loaning rates so low that money was cheap. So you have these kind of fiscal policy forces at play. Now it seems like then under Trump, of course, those were rolled back, and that's why kind of the ceiling was lifted on how big a bank could be before it was being regulated, right? So the Silicon Valley Bank, instead of $50 billion, it got to have up to what, 250, something like that, before the regulators actually had to pay attention to what was going on. So what is the policy fix right now for this, or is there not a policy fix?
There isn't, and this is one of the things that I wrote about in Finding Signal in a Noisy World. which I'm sure we'll explore more here.
Mhm.
All money is information, right? People actually don't want more money. I know that's going to sound crazy to many people listening to this, but you don't want more money. What you want is more of what you think money buys you. And that could be a nicer home. It could be more time with your family. It could be a whole bunch of things on what
More
you
movies on Netflix.
exactly. It could be whatever you believe money. All it is a piece of paper or digital entry describing that. So a ledger that you know what you have versus what you think you need to provide the life you want. That's all it is. And so if you have manipulation in money, as a byproduct, you have to have manipulation everywhere in society. If you have misinformation in money, you have to have, as a byproduct, misinformation everywhere in society, because it's just, that's all it is. It's information. And so that plays well into what you just asked. So it doesn't actually matter where the money is manipulated. It matters that the big picture. It's like the P game, right? With the shell game, right? And the money has to increase. You have to increase the monetary base around the world by essentially diluting currency, by diluting the value of currency to stay solvent. And then it forces you to ask, so what is inflation, right? And why do people believe that a productive economy requires inflation? So all inflation is, if you're diluting the currency, is a transfer of wealth from some people to others. So it's a theft in money. So some people get rid of, if you have assets, if you have stocks, if you have more houses, those go up in value because they don't get diluted as fast. If you're closer to the monetary, if you're closer to the money, big businesses, you get it first. And inflation is wage deflation. It's the same thing. It's not two different sides of the coin. So it's just different sides of the coin. So it's wage deflation. So if you have savings or if you have wages, those are getting less valuable. So effectively, we have all around the world an agreement that we believe inflation is required for productive economy, because we've always lived in a debt-based society, credit-based society, and we put up with what rate of theft is okay, right? We don't ask, is theft okay? We talk about what rate of theft is okay. So then go to the next question. How could you have regulation? And honestly, on this, and if somebody has an answer, then I'd love to hear it. How could you have regulation protecting your money on top of a system designed to steal it?
Well, they just don't want you to have too much of it stolen. Just a certain pace, yeah.
And so that's the point. But that number has to expand, just because the fundamentals of what I talked about before, because the technology is moving one way, that number has to expand, and it has to. It's mathematically, it has to grow exponentially to offset. So 2% inflation. Why I think there's a target of 2% inflation is quite simply this. People don't notice if you walked into their house and stole 2% of their stuff each year. But they start to notice.
Seems acceptable to consumers, basically.
Yeah, they start to notice once that turns into 10% of their stuff being stolen each year.
So, as you've noticed, the Fed obviously, when you wrote this book, this was what, 2019?
2019.
This was even maybe early or before the pandemic. So you're kind of in a.
Yeah.
Okay. So there's been some big effects on maybe the macroeconomic system, some shocks to it at least. And the one that we're seeing right now is the Fed interest rates, right? So you got the Fed raising the interest rates, trying to drive down inflation. But I think you would like this, right? It's making money, it's at least not favoring the banks against the consumer.
No, so remember, they're creating the inflation rate by manipulating money, but that takes about 18 months to work through the system, right? To actually really see it. Remember when all the policies said there's not a worry about inflation, then inflation is going to be transitory. Now inflation is going to be. So effectively, you have people walking outside and predicting the weather by looking around them, not understanding that their actions created something that has a time lag. And so now you're on the opposite side of that. And now people are noticing the inflation rate, and it's starting to get out of hand, and it's way worse in other countries. US is the dominant currency, it's way worse in other countries. And because everything's pegged to the US. So as they ratchet up interest rates, then you cause a collapse of the system, because unless you have more and more printing of money, there is no way out. We're in a debt trap, right? $400 trillion of debt is already insolvent. So if you increase interest rates, the insolvency comes faster, and the counterparty risk, so that bank failing, they have counterparty risk with other banks, and those banks hold mortgages for a whole bunch of people, and that counterparty risk spreads around the world, and it just dominoes across the world. And that's actually why you see today kind of two divergent policies, and you see a breakdown, and people are wondering what's going on because of that breakdown, and they're talking about the events today instead of the second and third order effects of those events. And it has to get worse. So you have the Fed increasing interest rates at the same time they're providing massive liquidity support for all banks all over the world, because if they don't, the whole thing collapses. So you actually have you're going to have more monetary easing, a massive amount of monetary easing, because otherwise nobody on this call would vote to have the entire system collapse.
Exactly.
Right. So
and we also don't know how to sort of jump the rails onto a different system overnight.
Totally. And so that transition is happening, and that's where we will get to Bitcoin. That transition is happening in slowly, and Bitcoin is repricing that entire existing system rather than that system pricing Bitcoin. That's what's actually happening. But you'd have to be outside that system, and 99% of all of our time is inside that system. So we're easily confused by what's happening.
Let's go back to kind of the Silicon Valley Bank example. Isn't, though, the effect of low-cost money a driver for technology and innovation that then prompts a deflation? So
you could argue, has technology moved faster?
Yes,
because of low cost, cheap money, and in the transition that might look true, right? Yeah, it's not true over the long period of time, because the misallocation. What ends up happening is it's just a total misallocation of capital in favor of big tech at the cost at the cost of small companies.
Absolutely true.
Right. So that's why big tech looks like it does today. And then what big tech does is you lobby governments for protection from a system of theft, and big tech gets bigger and bigger and bigger. And imagine, just play that forward. Artificial intelligence is moving faster and faster, which should bring far lower prices everywhere, but it's being consolidated into big tech because of the same policy.
Well, that's a great segue for us here in our ecosystem, small country, small technology ecosystem, very, very limited financial resources to support the IT industry or startups or businesses that are related to technology. So we're, of course, interested in opening up access to investment, but conversely, we don't find that it reaches us here, right? Because, as you've mentioned, it's getting sort of swallowed up by bigger tech opportunities for that investment. It doesn't reach us.
Yeah.
So in that context, how do you make money or investment available to more companies if this system works the way that you mentioned it does?
You can't out of the existing system. Centralization and quite honestly, and people don't see it, because if you think about inflation and wage deflation in the US and how many people are starting to rise up against what's happening there, right? It picks the pockets of savers and wage earners in favor of big tech and big government. But if you think it's bad there, go into Africa, because this same system essentially what it requires is as their currencies fail, what it means is the US essentially can strip mine them, their labor and materials, for next to nothing. And that's the way the system works. It works today. Again, I wish it didn't, but that's the way. And so for countries that are further away from that money printer, or people that are further away from that money printer, the further you are away from it, the worse you do. It's a design of the system. It's a function of the system. So in a small country, you're further away. What El Salvador did by going to Bitcoin is stepped outside of that system. It's early still.
Yeah.
Because they stepped out of that system, they have massive racing to the and if you looked at, maybe they're up a little bit on their Bitcoin holdings right now, but what they're way up on is tourism, jobs, a sense of hope from a new system that is emerging there. And I've visited, so I know that on the ground, and I see that what's happening on the ground. It's a free market system, and there's a lot of entrepreneurs and successful business and capital racing into the country to be able to take advantage of that new system.
Before we talk more about how that system might work, when you think of deflation and the potential negative effects of deflation, the decrease in economic growth as we understand it, right? How does that help the economy? So how does the economy grow in a deflationary?
Yeah, I love that question, because it presupposes, the question is presupposing from the existing system.
Yeah.
Right. And so ask it another way. Right. So all deflation is when your money buys more goods and services, it's more valuable. Your time is going up. Right. And then and when you say growth, right, I think what you're measuring is growth in GDP. Which is this concept, and
that's where I wanted to go with it. Exactly. Kind of the value of labor as a measure of productivity.
Exactly. So, and that's why these concepts are so hard, because they have to unwire concepts that are in our brain that we believe in.
Can I just add a clause to what I was saying? It's so funny, because as we hear it from industry, what we're told is, yeah, Costa Rica is not productive. Your labor is not productive enough. And we're thinking, what do you want us to do? We need to learn new things. You want us to be upskilled or reskilled? You want more technology in our companies? What is the issue? Why are we so lame?
So, and you hear all over the world, it boggles my mind that people actually believe productivity is going down when they can look all around the things that they're using. Look at this, what we're doing right now, talking to this conversation could reach millions of people, completely productive, and it took this much time, when it wouldn't have taken that time. It would have taken an enormous amount of coordination and planning 10 years ago, and it couldn't have touched those people. It's staggering. You know why productivity is down? And you know why productivity is down in Costa Rica? Because you're measuring it through a system that has to take that productivity into higher hands. It's stealing it from you, because it's measuring from a, so look at your camera. Look at how many photos you take today versus what you took 10 years ago and what you paid. The reason why it looks like it's down is productivity moves to, in the new world, productivity is deflationary. It drives prices down, right? It has to, because prices fall.
That's the role of technology. You add technology to make the unit of labor, so to speak, more valuable.
Yeah, and so if you're measuring productivity from a system that has to steal that productivity and transfer it to few people's hands to be able to be effective, then you're measuring from the system that's robbing your productivity.
I wonder if this goes back to thinking of the US system. There was this move in the US, I think it was under Clinton back in the 90s, to make kind of everybody an investor in the stock market, right? You know, what happened in the 90s, sort of your IRAs and all that. It's like everybody's now a stockholder. We're all owners of the system. Is that not true then? Don't we benefit because we're owners as opposed to just laborers?
So it's true for the people that own most of that system.
Mhm.
That's kind of what I'm getting at. But in Costa Rica, you would own less of that system. So your pocket is picked at a corresponding rate. In Africa, they own far less of that system.
Right.
And if you're a lower wage earner in the U.S. or a middle class family, you own far less of that system than Bill Gates owns. And so of course, or Warren Buffett owns. So of course, all of the rails, all of the media that you would listen to on how that system operates, including education, unfortunately, would be enhanced by keeping the system running.
Yes, because we're told we should learn more and more new things, upscale our knowledge base so that it can be more productive, more valuable, productive labor. Makes sense, doesn't it?
Makes sense.
Okay. And then we add some technology to assist us in that process so we can be knowledge workers assisted by technology, raise the value again of our productivity. Doesn't that sound great? Doesn't that sound like what everybody should be doing?
Yeah, and prices should fall as a result. That's the point. But they can't fall if you're manipulating capital, if you're manipulating money, so they can't fall. That exact force should save your time. As entrepreneurs are creating more value, you can remember we're both sides of an equation.
Yeah.
We're a buyer and a seller, right? Every piece of labor we use is, so how could it be on one side of the axis, we want all prices to go up forever in our houses and everything else because they're manipulated. And on the other side, we want more value.
Mhm.
It can't work. So because we're both sides of that, but we're caught in this loop that people can't see it because it's an abstraction level above what they normally would look at.
Mhm.
You don't, when you think about, I'd have people on this call go and just go up and pull up an image of a million, just go on Google search and pull up an image of 1 million versus 1 billion versus 1 trillion. And think and look at that image. And because our brains can't understand trillions and how big that is, it's a difference between billions and millions, we can't understand when our money is being diluted at that rate. So we're measuring from a system that is stealing the productivity of labor and transferring it to very few people. And the thing on Bitcoin specifically, and outside of that system, if you're looking through that system, you might think Bitcoin's a scam. If you actually understand how that system works, the plumbing level on how that system works, and there is no fix from that system, and you can currently do the work on the plumbing level of Bitcoin, and it's the only thing on the planet that is without counterparty risk outside of that system, then you can see what's actually happening is if you actually have open curious to this and you've done that work, then you can actually see that transition. What's happening in Bitcoin is Bitcoin price isn't going up. All prices are falling relative to it forever. If it's what it's doing is actually proving my thesis. The prices fall to the marginal cost of production when you can't manipulate the currency. And so what people believe it's going up because they're looking through the manipulation of the system, and it's going up a lot more in Lebanon than it is in the US, or going up a lot more in Argentina than it is going, because again, all of these currencies are pegged to each other and they're all being manipulated at an ever increasing rate to drive inflation, to try to pretend they're solvent, and they're not. And Bitcoin doesn't care. There's no person controlling, but it just doesn't care. It just keeps on moving along. And so it's repricing the entire global system, whether that comes from deflation and a credit collapse or inflation. It's repricing the entire thing.
We have a question from Jose in our Q&A here. He's asking back to the example of Silicon Valley Bank, and he wonders how much of that was due really to those interest rate hikes in the devaluation of the bonds that they were holding.
Yeah, so I get a kick out of this because I almost can't read anything through mainstream press anymore because it's so biased.
We're trying to interpret the Fed.
We're trying to interpret this. And so let's say So the Fed created all of this capital that had to go somewhere, right? And they had interest rates, really low interest rates, and because Silicon Valley Bank couldn't create loans fast enough for all of that money, they had to put it somewhere. So what would be the safest place to put it?
It's a hedge. I would put it in bonds.
On the Fed balance sheet, right?
Sure. Get it back to the Fed.
Yeah, put it at the Fed, because that's a risk-free rate. And so I'm not saying there wasn't mismanagement. There's mismanagement because they should have thought about hedging that strategy. But they've created, they put it in the risk-free money that the Fed told the world were not increasing interest rates. Remember when inflation is not going to be there, or it's transitory, they said to the world, we're not increasing interest rates. And so if you're a bank and saying, I'm going to listen to my government and saying then I'm going to put it there because it's the safest money, and then change interest rates go up and they're massively short. And then the Fed comes in and Treasury comes in and says, we're only insuring 250,000, right? And these banks who listened to us are all offside. And if they think they're offside in the US, they're way more offside in the US and Europe, way more offside, because interest rates were negative there, right? And so the same thing it'll be cascading across Europe, and the crisis is going to accelerate from different places, because there's still, and so now you have this event. And now you create a bank run on all the other, because the Fed says only 250,000 is insured, and all of the companies that have more than 250,000 in payroll,
which was everybody,
what would they do? They would move their money out of that system, all those small banks, as fast as they can, and be captured into larger banks, which is again the centralization of the entire system that has to happen. But all of these questions are inside this system, and most of the world is reacting on these tiny little, and I say they're tiny, they're massively important for certain people that are in them. But if you zoom out on what's happening, on what's really happening, and you move your time and energy into Bitcoin, all of this is just it's just noise. It has to happen. It gets worse.
So we're almost going to get to that question of Bitcoin. There's still some more questions around the financial system that we're in. And when I say it that way, it's because obviously most of the economy is in this system. Most of the businesses that operate are operating in this system.
99.9%.
Exactly.
We measure, when you ask a fish, how's the water feeling? They don't know what the water is.
Yeah, what are you talking about? Exactly. So one of the questions here from Christian Sanchez is, so if we're going to think about investment in technology companies in a country like ours here in Latin America, we want to enhance and promote local investment in the system. What would you say are sort of the key drivers to be able to do that successfully? How do we get out of that system or create a system that is beneficial to the development of a local, thriving local industry that doesn't get us into these traps of the predominant system?
So again, this is going to be hard to unwind for a lot of people on this call, because they're going to go back to the existing system. In fact, effectively, what they're going to be doing is arranging deck chairs on the Titanic while the Titanic's going down. And so the only way that I've seen, and that's actually why I started Ego Death Capital, is to start investing my time and energy and money into the new system that's developing. It's literally the only way. I still have.
It's a long shot, though, right? It's still
no. It isn't. It seems like a long shot.
It does,
right? It seems like if everything we just discussed is true, right? If that's true, you could argue, and I'd love to if somebody has an argument against it. But if everything, because I haven't seen one, my book's been out. It's been a bestseller all over the world, and I haven't seen a plausible argument to my book, a counter argument to my book, not one. So if that's true, then that would say what we deem as risk or as safety actually holds the most risk. That and so we should investigate this like really deep if it was that important to deal.
I'm trying to think of a counter argument. I've got one within the current system. Here I go.
Yeah.
Okay. Within our current paradigm, the financial system I'm going to call on to support the growth of a local thriving economy is the Grameen Bank style, community bank, cooperative style, small group of investors. They're supporting each other with their capital, but also they're almost acting as self-regulators, right? Within a group of investment.
Yep.
That's my answer to your.
Okay.
To your
so actually, I love that. I love that because I love that example. If the donations and the money come to that group from higher in the system, could it change anything?
Well, no, but let's say it comes from within the system. So you've got, let's say we're here in Costa Rica, the IT Association has 200 members. Let's say we say we're going to create, what do you call it, an investment bank. We're going to create a bank. We're going to create a cooperative bank where we're investing in each other and we have each other's back. We're looking at these investments. We're in small investment groups. We're judging each other's decisions as board members, et cetera, right? Does that not then create a system that works?
Because it has to be pegged to a global system. Otherwise, in that system, let's just carry that forward. In that system, you have a local economy. Essentially,
we're not a closed system.
It's a barter system.
Yeah.
And
we're still going to export. We're still going to import.
And as you roll up to the next level, that entire thing is at risk of manipulation at the higher level. So look what would happen look what happens and I know it hasn't happened in Costa Rica recently, but imagine having your savings in a bank in Lebanon and the bank's closed, right? And then the next day there's 2 more zeros on your currency and all of your entire labor, but that is going to happen at an increasing rate all around. It's
happening other places here. Yeah.
It has to out of the existing system. It has to.
Okay, so
because here, and I'm going to actually add to this. Energy is without energy, there's no life, right? So, and there's been a massive innovation in technology development in energy as well. So, why are energy prices higher?
Well, we know why they're high in Costa Rica, but that's a different.
Yeah, but they're higher all over the world because of exactly what I just said. We've had technology everywhere. So what ends up happening in the US, what effectively happens today is US gets energy for free because they can print it. And everybody else is at a disadvantage because they have to pay for it.
Of course.
And so you could live in a subsystem that is connected to the bigger system and think you're okay, but you're still into the bigger system.
Yeah, we certainly know in Costa Rica that we're connected to bigger systems that we have little or no control or agency over. Absolutely. Yep. So you conclude that the benefits of this rapid pace of technology evolution are not being reflected in benefits to society at the same pace. Why is that? Is it because the big tech or the owner are taking a larger share of the dividend of that technology evolution?
They're stealing it. They're stealing it out of the financial system. If there's theft in money and it's robbing the productivity the productivity should flow to society in the form of lower prices. And that means our time, we should work less. Even if you go back to Keynes, right? Who I disagree with strongly on because he missed human nature. But in his ideas, he missed how throughout history, if you could control money for your benefit to somebody else's expense, history proves we will. So that's what he missed. But in economic possibilities of our grandchildren, he predicted the average working week around the world in 2020, 3 years ago, would have been 10 hours a week, distributed average around the world. What's happened? Some people are working 80 hours harder and harder and harder on a mouse wheel that's moving further and further of them. And some people are working nothing, rent extracting from from those people. That's
Absolutely.
what the system looks like.
Mhm.
And so
and there's a bigger obviously divide between them.
And it has to be a bigger and bigger divide, has to all the time. So that productivity gain from tech should flow to society in the form of lower prices. And if it isn't, there is nothing else I have to say. If it isn't, it's being captured by someone. And how is it being captured by someone? And who's it being captured by? Winning, who's losing?
So within this system that we have today, is there any way for this technology abundance to become more broadly distributed without a paradigm change?
No, it's impossible. What's more likely is you divide society and you go to war to
resource wars
and proxy wars, resource wars, everything else, to pretend that it's somebody else's fault, because that's easier to believe than than you're going through a system change. It's easier to believe that a person's at fault than a system is responsible for it.
You know, it's curious. I had a chance to listen to the Noam Chomsky interview at South by Southwest a couple of days ago. You should listen to it because he has different solutions, but he has the same analysis that you do. I think you'd find it really, really enlightening as well. So you have the famous quote that's abundance and money creates scarcity everywhere, while scarcity and money creates abundance. Can you explain a little bit more what you mean by this? How does this relate to your view on the deflationary potential of technology?
Yeah, and again, you can see this in the oxygen you breathe. When things become abundant, because of what I talked about, there's no way to create money from it. As it becomes more abundant, the price falls precipitously until it's abundant. Same reason your calculator app on your phone is free. Your calculator app is not free because people are making money on advertising. It's free because there's 50 apps competing for your attention.
Sure.
Would I fund the next calculator app on the iPhone? Like, it'd be ridiculous, right? Because and that's the point. Those things fall to free. So if you pretend they can go up by creating more monetary units, then the prices of everything just go up according to the monetary units, right? And if you fix the monetary units, then the prices fall forever of everything, of energy, of everything, and they keep on falling forever, to the point of and why people have a hard time. They're trying to pick a light switch moment when it's free for everything. It doesn't even need to be a light switch moment. It's just a trend of forever falling prices that in industry after industry or thing after thing, they all turn to free over time.
Technology-based things. There are things that
I would argue just about everything. I would argue. So energy.
Yeah.
Energy is abundant on this planet, completely abundant. We don't have a price. I'll give you an example in BC. Site C Dam. So we have
BC
energy.
is Canada.
BC in Canada. So we the government created the Site C Dam, and BC Hydro is kind of a quasi government agency who used to all of the local energy providers delivering extra energy were turned off because otherwise you couldn't pay for Site C Dam. So it wasn't energy abundance.
Yeah.
There was energy abundance, but the price would have fallen so precipitously that they had to turn off all of the other supply to be able to pay for the dam.
Right.
And so you have energy, stranded energy, decentralized energy.
It sounds like the Costa Rican example.
Yeah, and that would be normal everywhere. There's abundant energy. There needs to be a pricing mechanism in the market, which Bitcoin mining provides, to be able to go and find that stranded abundant energy. And it's also clean energy.
Yeah. Well, that example is you also have the dirtiest energy coming out of Canada through the sand.
Yeah, and so if you think about these examples, you think, wow, so exactly what you should do, you're not doing. because and it's all driven by economic incentives, all
Yeah.
by money. And so the money is being manipulated, and money has to create more and more monetary units, which pushes up energy prices. And people think there's not an abundance in energy, and you're trapped in the system,
Sure.
consolidating the problem.
So I'm going to get to Bitcoin in a second, but before I do, I just wanted to talk a little bit more about these technology trends and their impact. The current one, obviously, is artificial intelligence. We've all been mesmerized over the past few weeks and months by some of the innovation coming out of this space. This seems different. This seems really disruptive. I'm sure you've tried the ChatGPT type things, and there's a lot of other innovation going on. So I know that you have expertise in this area as well. What do you think is going on right now, and what will be the impact of these kinds of technologies on the deflationary effect that you've been describing?
So, in my book, there's 2 chapters dedicated to this.
Yeah.
Because I foresaw the rate of improvement that very few people saw, right? And
can you describe why that happened? Like, what was the big detonating force over the past few months?
So there wasn't a detonating force. It's an exponential pattern. If you fold a piece of paper on itself,
it feels like a detonation because the exponential has happened.
Exactly. If you fold a piece of paper on itself 50 times, you can only fold it 7 times. But if you could continue folding, that thin piece of paper would reach to the sun. And I know, and when I asked that question, tens of thousands of people all over the world, most people guessed 2 inches. If you compare where that fold is compared to today, where we are on Moore's law, that fold, we're on fold 34 going to fold 35.
Mm-hmm.
And so all that's happening is the steps are big. So if you think that the ChatGPT and everything else today looks like this, wait till you're measuring linear, and wait till you see next year and the year after. You can't, there's no possibility you can keep up to this. And so I don't know an entrepreneur, I don't know a company right now that isn't feeding that system to make it smarter, to remove labor. I don't know anybody that isn't doing that. It's trying to save their time. And the output of all that time savings, which makes it smarter, steals their time and captures it in a singular focus. So it's a really dangerous, I can't believe that people could be excited about this and live in a financial system that has to steal it from them.
Okay, but what's the danger? Because of the concentration of power and wealth and
the danger over time, if you have to have a job, if a job is required because of a monetary system that forces prices up, and at the same time that the technology is concentrating those gains in a few hands away from you, instead of the AI enabling you, it enslaves you.
Yeah. So you're saying that this technology innovation and evolution is not contributing to your productivity anymore. It's become a replacement for your productivity, or at least you're not going to be prized for the increased value of your productivity anymore.
What you think is happening is, for a very short period of time, you're winning against somebody else losing because you're using it.
Yeah, that's right.
Yeah, that's what's happening. And you could win inside that game for a very short period of time until yours is taken and captured as well. So that's what, and it has to happen at an ever increasing rate. In fact, I wrote a sentence in that book that said, all intelligence, including ours, is just error correction. Right? All intelligence is error correction. So all that's doing at a different, it's constantly correcting errors and getting better and better, and we're contributing to correct the errors, and it's rising to another level. How could that not be productivity on steroids? And how could that not reduce prices everywhere? It's illogical.
Yeah. I can see this, and I guess I don't know how it plays out in your model. It seems
in my model, if you're on Bitcoin, you're seeing prices fall against everything. That's what, and everything. So if you have a different model of the world and you're reinforcing, trying to make these things fit into your model, you're going to get really confused. What I'm getting at, that's why I started at the top. prices fall to the marginal cost of production, period.
Mhm.
If you can say yes to that, then everything else will discount the existing model you're in and reinforce, okay, what model would we live in that would allow that to happen?
So this is going to be a great segue to talking about Bitcoin. The last question about AI then is, because we're in the system we're in, could this be the reason that we do kind of transition to a new system, a new economic system? It seems to force the hand of the system at work right now, does it not?
Yeah, so it does. And first, and if you go and kind of back up to Bitcoin and what that is, and I would recommend everybody go to, it's on my site at jeffbooth.ca, but go and look at an article I wrote called "Finding Signal in a Noisy World,"
Mhm.
because it'll take a way deeper dive on
That's
this.
on Medium, right? It's a Medium.
It's on Medium as well. Okay. Yeah. But it'd take a way deeper dive into this conversation at a first principles level on why Bitcoin than I can on this call.
Sure.
But let's just assume,
I'm putting it in the chat for everyone there. There we go.
So let's just assume we're stuck in this system. We measure by that system, and everybody is stuck in that system, trying to work harder and harder, trying to buy more houses to save in that system, trying to do everything else, and making the system more and more fragile with all of their work. That's would describe 99.9% of the world. Fair?
That's fair. Yeah.
Is there a system that could effectively do this? We are all paying for debt that can't be repaid. We are, all of our time is paying for the debt, $400 trillion that can't be repaid, with our time contributing to that system. We're all doing it. Where you can just choose something that doesn't have counterparty risk and not do it anymore. You don't have to pay for the 400. You can right now. Every single is an open network. It's an open decentralized protocol.
In what way? As let's call it a consumer, where I'm using it as the money of exchange, or as an investor?
So let's start at the base level. So first, at the base level, if there was something decentralized and secure that was outside of this existing system, you would expect every attack vector to try to kill that, right? Because there's so much power and money, and the more money you have, the more power you have, and this disrupts it from the bottom up. So if there was something like that, you would expect every possible attack vector like that. And so Bitcoin essentially chose decentralization and security on a blockchain trilemma. You can only solve 2 of 3 sides of a blockchain: it's decentralization, security, and scalability. So chose
decentralization and security. So the scalability of Bitcoin, there's a limit there.
Exactly. And so what that would look like in that system is, if you measured from the greater system that's 10,000 times bigger than Bitcoin, you would say, okay, here's a whole bunch of people have created wealth over in Bitcoin because their money wasn't essentially being eroded. So it looks like it's going up in value, right? And a whole bunch of people are creating wealth there, and it would obviously create a market incentive for a whole bunch of other blockchain and to say, I have a new idea on Bitcoin, right? I have a new Bitcoin. It's better. It's technologically superior. And so how could it be technologically superior? Let's just go through the options. If Bitcoin did decentralization.
And here you're basically differentiating Bitcoin against other cryptocurrencies.
Exactly.
Right? Okay.
Exactly. And making
so you're not saying cryptocurrency by default. You're saying Bitcoin specifically.
Only Bitcoin. But this is going to go into a bunch of your other arguments too. But let's just say, so you had something that was provably more decentralized and more secure every single year, but couldn't scale. Every year, more security against the network, more decentralization against the network, and it's stronger and stronger. Never been a hack on it. Never. Some of the exchanges, yes. Never been a hack on Bitcoin. Every year gets stronger, more secure, more decentralized, but lacks scalability. So in that environment, when it creates that kind of opportunity for early adopters on Bitcoin, it would obviously create a massive adoption for other cryptocurrency, right?
Yeah, and for investment, it becomes
Investment, yeah. And so in that environment, how could you solve the problem differently? You could say it's just open source code. You could say, I'm going to cut this over. I'm going to create a new one called Dogecoin, right? Right, and make a whole bunch of money there because I have a new form and I have most of it, and because it's open source technology. But
and it's unlimited. It's entirely scalable.
But by very nature, if it actually had the same utility, decentralized and secure, and less decentralization and secure, it would fail, right?
So,
go ahead.
Your trilemma is those three. You say you can only solve for two of the sides of the trilemma, right?
So now let's deal with a different side of the trilemma. Let's say I wanted to create Ethereum, and I said I'm going to solve scalability, or I want to create Bitcoin Cash. This is all you could, and I'm going to solve scalability through larger blocks, right? Whole bunch of different alternative ideas, right? And so, but I have to, by doing so, I have to sacrifice one of the other sides. I have to sacrifice decentralization or security. Okay. And look at the myriad of 20,000 coins that have sacrificed security, and they all go to zero because they all get hacked, right? So let's focus on the ones that solve security and scalability, but at the expense of decentralization. They centralize. Ethereum being a good example. Bitcoin
Maybe
Cash
even some of the ones that are created by financial institutions, probably.
All of them, same thing. Yeah, all of them, same thing. It's just it's really simple. It's actually it's simple tech, right? It's expensive tech, but it's actually quite it's quite simple. And so let's say you solve scalability and security, and you sacrifice decentralization. So now you have a more expensive database, right? A very expensive database because it costs a lot to run, right?
Sounds like something that the big financial institutions would like.
But who would use it? Because it's more expensive. It's more expensive. Like, what type of utility how could you possibly have decentralized finance on top of a centralized blockchain? It's ludicrous. And so just the economic rationale, Amazon's not going to move all of their materials to a more expensive database. There is no such thing as Web3 on top of a more expensive database. The economic rationale alone obviates the need for that, because of a database is a far cheaper. If you're going to centralize a database, is a far simpler way to do it. And so that's where most people miss this. I understand why they missed it, because so many people were making so much money and it looked like, oh, wow, I'm inside. But only people that could make money long-term would be the insiders selling to other people before they got them.
Yeah, it's the pyramid investment scheme, basically.
And it would obviously, in that type of environment where that would look like this, and money is being manipulated in the greater system, and it looks really valuable. And it looks really valuable. There would be a lot of money in the world to conflate those different things, Bitcoin and everything else. There'd be a lot of lobbying money to governments to conflate those different things from the ecosystem that got rich on the backs of this fraud to others. So what ended up happening is Bitcoin couldn't do anything on layer one. There was nothing to do. You just sat there, put your money there held in self-custody, and there was nothing you could do. And for a long time. And now, but it's a protocol, and it's the base layer of a protocol. And the second layer that is now on top of it is Lightning and Liquid and others. And it doesn't, now it can scale, but it doesn't sacrifice layer one to scale. So
so Lightning is really the solution to the scalability without having to compromise on the security and I forgot the other part of it.
It's decentralization.
Decentralization,
yeah,
absolutely.
So then so now you have scalability on top of that, and by the way, it's just starting. The amount of if people downloaded a Lightning Wallet app right now, if they download Wallet of Satoshi or something like that, on their phone. You can transact value outside of the existing system around the world in a fraction of a second for pennies on the
Yeah.
fractions of pennies. And so now you have a network effect building on top of a protocol that's moving faster and faster and faster because it's providing so much economic value. And right now, most of the world that doesn't know what I just said about Lightning or other stuff, they certainly don't see what's coming next. Fediment and others that layer 3 solutions that move the rails of commerce in a new direction that provide a lot of value for society. And this is important.
Can you describe what this is, the Fediment that you mentioned? I don't know what that is.
So today, I would say it just that I'll describe it a little bit, but why people, when we're explaining Bitcoin technically, right, and why this is so much in an environment that they're used to, it's hard. Most people don't want to go down to the sand of any financial system. They get value from what's on top of the system. So if you look at what you're building your life on top of the existing system that has faulty plumbing, but you don't look at the plumbing until there's an event that cascades the system where you start to look at the plumbing. That's what's happening today. Similarly, nobody wants to hear about the plumbing on Bitcoin. And trying to tell them to investigate how deep this is, how profound an impact this is. They don't want to spend the time because their life is too busy on top. But the rails that actually make their lives better, an entire rebuild of the internet is happening on Bitcoin right now, where you have a peer-to-peer distributed internet with money native to it that can't be manipulated. That's what's happening today on Bitcoin. And so Fediment is an example, and what it does is some of these ideas simplify so people won't even talk about Bitcoin later. They won't even know. They won't care. They'll get so much value. But Fediment is almost a shared custody model. So today you have self-custody, which feels really hard because people don't want to trust themselves. They want to trust a bank because we've always done that, even though they know the bank's manipulating the money and it's more risk there. They want to trust somebody else to hold their money. And Bitcoin has a self-custody model at the bottom of it. Because it has a self-custody model at the bottom of it, with that human bias that we want to trust other people, most people don't self-custody. They store it on exchanges, which is high risk. Essentially, trusting somebody else.
We saw the effect of that recently.
FTX, Coinbase today, all of these exchanges, but tons of their money is held somewhere else.
Yeah.
Believing that somebody's going to protect them when that somebody is actually probably abusing them.
Okay, so Fediment is a response to the FTX kind of holding.
Exactly. You could create a small federation of your family.
Oh, I like that. Well, that's what we could do in the technology sector here, for example. That would replace my Grameen Bank.
Totally. That's exactly what it is. Okay. And so these are early solutions, but they're really robust, and they'll take Bitcoin without even knowing people is Bitcoin at the base into billions of people because they're so secure and so robust.
That's interesting. So the volatility we've seen in Bitcoin is really nothing about the Bitcoin system so much as the way it relates to the existing system. That's what you're talking about.
So just remember, anytime these ups and downs, look at the volatility in the Federal Reserve and all the other banks printing and tightening.
There's the volatility.
Yeah, exactly. And just now think with an 18-month lag of what they're doing, and that's the volatility. And Bitcoin's just measuring it before it comes. It's really immediate. It's happening, and but it's actually. And by the way, any technology company, you know this if you're investing in technology companies, in an early stage technology company is always upwardly volatile.
Yeah.
Right. So
that's what they call it venture capital, right? It's risky.
Exactly. In this case, it's actually not volatile. It's measuring the real prices, what should be the real prices of everything. So in your house value will go up in fiat terms, but will go down in Bitcoin terms. And as will every other thing
Yeah, that is so hard to grasp, isn't it?
So that's why it's so hard to get.
And it just seems like something you don't
three
want
three
to
year
have.
three years ago, the average house in the US would have cost 400 Bitcoin.
Right.
Today, the average house in the US costs 30 Bitcoin.
Yeah. I'm going to take a brief pause. We're a little past the top of our hour. I just want to remind our guests here with us today that they can ask questions and I will pass them along. Podemos hacerlo en español o inglés como gusten. Tenemos el Q&A, el chat ahí disponible para las preguntas. Bueno. So going back then to the Bitcoin system, my first question is, these systems currently coexist. Does this play out in that they coexist and Bitcoin rises as the other system fades? Or how can this happen without chaos, tragedy, and ensuing conflict?
Yeah, so that's a really great question. I use an analogy to explain that question in kind of my what I went through understanding kind of tech, because I went through this in the .com world. I built a lot of friends with all the tech leaders of some of the majors and stuff. And I remember at Amazon in '99, there were kind of two polar different arguments of fear. One, all stores were going to collapse tomorrow. Where would you buy groceries? And the second one, nobody's going to buy online. It was crazy. Two totally different ends,
very polar
polar examples, and all the fighting about that and different ideas about that. Now think about what happened. Same world. If you were an executive in Amazon, you saw everything growing and life was good. It was getting better and better and better. And if you were an executive at Sears, got harder and harder every year.
Yeah.
Describing the exact same world as a transition. And when Sears closed in 2010 or so, nobody cared, because more of their purchasing
shareholders.
Yeah, exactly. But Sears shareholders did, but virtually the public didn't care. Nobody cared. And so what is happening at a way bigger level than that example, because that's inside the market. This is at a meta level. It is the market. But personally, that's actually what's happening on Bitcoin. If you're in Bitcoin right now, you're choosing that world, and it's getting better and better and better. And anybody, because it's an open network, you can choose before your government chooses. You can front rent the banks. You can and you're choosing that, and life is getting more and more prosperous for you.
Let me just ask, when you say if you're on Bitcoin, what does that actually mean? Are you talking about I'm using it as a consumer? Am I investing in it? What am I doing with it that makes me on Bitcoin?
So to me, the very basis, people should save in Bitcoin as a savings technology. That would be hold it in cold storage, have it as savings technology. From there, so as you start to understand it, and don't just take my word for it, that people should do a lot of research and say, is Jeff saying, is he speaking the truth, and does this look like this?
You're talking about buying Bitcoin.
I'm talking about buying Bitcoin.
And are you doing that through who then?
So every region has an exchange. If there's no exchange, there's so many different places. If an exchange,
how do you not end up in an FTX kind of?
You don't keep it there. You buy it and you put it in cold storage, and you self custody.
Okay.
So, and people could reach out to me afterwards if they want to know how to do that in a really secure way. But there's lots of Ben session, BTC sessions on YouTube. Does really great he's not biased on any one solution. He does really great information sessions on how to do that. There's tons of information there, as lots of others. So that's what they should do at very minimum. As you do that and you start to see this new world, you'll start to say, should I transact in it? And should I start building? And then you might get to where I am today. And all I've done is made a choice. And I've said, I know where the existing world's going, and I'm going to spend more of my time in the world that I want my kids to grow up in. I'm going to start influencing the world that I want. And that's why I'm investing on entrepreneurs building on top of this system. And if you get to start to see that, quite honestly, and it's so hard to actually even convey because most people aren't in that system. I can't believe how exciting it is. And I can't believe more people aren't there. It's so exciting. And it provides a bridge to the other side. So the existing world's going to get more chaotic. As it gets more chaotic, people are going to listen to the news, what's happened to the SBV, what happened to Credit Suisse. They're going to listen to all the same people inside that system, telling them what's going on. And they're going to make it stronger because they're going to be fearful of the existing system. And all of their work is going to continue to reinforce that system. And some are going to start walking across to a new system, and they're going to build a bridge. And as that bridge gets stronger and stronger, as more and more people walk across, that new system is going to dominate. It's going to take some time to play out, but every single person on the planet has the same choice right now. They just don't know they have the choice because they're measuring the system from the system.
I have a question from Alejandro about that, actually.
Can I just add, because you'll know this from, and it might, the monopoly always does a similar thing to protect a monopoly. And why technology is always bottom up from the people furthest away from monopoly is because they're most hurt by the monopoly. So if I looked at people in Africa, why the growth rate on Bitcoin is so strong in Africa is this. Why El Salvador went on is
because
exactly
they don't invest in US stock market.
Exactly. Why? And so it's no different if the monopoly is money. It is no different. It is the same thing. And so we're just talking about so in Costa Rica and what you talked about before, and why can't we win on this type of thing? You can. You actually have an advantage if you stop looking through the monopoly.
Let me bring you then to Alejandro's question. He says, as you look forward, is there a quote unquote iPhone moment, a moment where you suddenly have 1 billion plus mainstream users on Bitcoin? What would create that moment?
It's not a moment. It'll be perceived to you as a moment. It's happening. If you looked at the exponential rate of growth of both Bitcoin on the base layer, holding it as a bearer instrument asset, and the exponential growth of Lightning, what's happening, and then if you saw the innovation that's happening in this space on top of it, it's past that moment. You just don't recognize it. It's way past that moment. Bitcoin might be one of the bigger countries right now in trade. Lightning transactions are hitting all-time highs every single month as more and more people use this. If you go look at what Nostr is, go just type in GitHub and Nostr and see what that is. And it's called Nostr is notes and other things transmitted by relays. It's what and Bitcoin is native to it. It replaces Twitter, it replaces Google, it replaces YouTube, and there's nothing the existing system can do about it because your private key, you can move your information to any client and carry your followers with you. You can carry all of your information with you. And these are, if Bitcoin didn't exist, you couldn't build something like Nostr. You can, but it's really hard to see how these interplay and create more value unless you're that close to that system.
Speaking of this interplay of new technology and the insurgence of artificial intelligence, is there an impact on Bitcoin from the artificial intelligence?
No, it's different. Bitcoin allows that productivity to flow to society.
Okay.
So it's the only thing that allows that productivity growth to flow to society.
Makes sense. Going to a question from Eduardo, he's going back to your analogy of the housing market. So he says, if the price of assets such as a house is forever dropping vis-a-vis Bitcoin, then there would be an incentive to hold the Bitcoin forever. If that's the case, then how do you ever come across or make transactions?
So I love that.
He's an economist.
So Bitcoin has unlimited velocity in money. on layer 2, unlimited. And so if you could create, if there wasn't a payment rail that did that on top, like layer 2, then what would happen is probably what would happen based on that question is people would hold it forever and then create a new fractional reserve system on top of it. Because it would form a base of it, just like gold.
Yeah. Okay.
And then over time,
Yeah.
when people had a run on that system, then that Bitcoin would be redistributed, but it would do exactly what he's saying. Essentially, you would create a different group of power people that would create that on top of it, with a payment rail on top of it. People are what is essentially you have value exchange inside the same currency unit that is a bearer instrument that can't be manipulated. And so some people will hold it, but let's go to the final thing. Let's say we move to a Bitcoin standard and everything's on a Bitcoin standard, and you have 10,000 Bitcoin. You have the most Bitcoin single-handedly. You're
Bitcoin
person. Yeah. What do you do next? You want to have a standing army to protect it? You're distributing your Bitcoin. Well, unless you're creating value for people, you're distributing your Bitcoin. Everything is in service of value. Productivity falls to prices fall to the marginal cost of production. And so the more and more you're doing, if you're spending on that system, you're distributing your Bitcoin. And if you're producing value for others, you're accumulating Bitcoin. That's what the world is going to move to on this standard.
You've written, as we commented earlier, that the debt-based economic system only works if credit expands, and this is incompatible with the nature of technology that is deflationary. So how does Bitcoin fit into that as a decentralized?
It allows a transition. It allows a transition that nobody realizes happening, just like they don't realize that the credit has to expand in the existing system, and that's what's pushing up the prices. So it allows a transition between systems without a complete collapse of one system. Those transition are, and yes, the people that move early and the people that are seeing that value are going to create way more value in the new system, but it just allows the transition because there is no other way out of pick door 1 or pick door 2. Credit collapse, and everything is counterparty risk to that credit globally. Expand credit forever. Centralize every function. There is no free market. Essentially, AI controls you, and who controls AI? There is no other solve from that system. It has to have a transition. All Bitcoin is a transmission mechanism to that system that is outside of anyone's control. It's an open network that every single person on this call can choose to adopt to.
I have a couple more questions. I know that we're coming up on the end of our session. I can't believe it's been almost 90 minutes already. Alejandro asks, he says, companies like Strike are positioning Bitcoin as the rails, transfer value across space without the user having to touch Bitcoin up front. Could this turn out to be more of a rail between the systems?
Yeah, so that's exactly Strike, Fedi, Amphetamine, all of these. There's hundreds of companies and building to be able to create their idea of how to be able to expand this to and make it simpler to use. Strike is one of them. Jack's fantastic. But yes, all of these are just different parts of a network hardening and getting more and creating more value.
We spoke briefly about the example of what's happening in El Salvador, and it sounds like you're bullish on that working out for them. The question then for Costa Rica is, what should we be doing in Costa Rica?
You should be going to Bitcoin as fast as possible. Like
you
literally,
would do it in the Salvador model, sort of another.
So that was a top-down model, and it's still only probably if I went there and I said it's not widely used, and it's probably not widely used. It's maybe 5% use rate. In some regions, it's more. It's growing really fast, but it's still early. But what it did do is drove massive tourism, massive adoption, and massive inflows of capital to be able to transition.
Yeah,
so
that's kind of like the public policy driver to that.
Exactly. And so at the very least, each person there should hold some to but if you talked about it, the government law, the faster you move here, the more opportunity you'll see.
So
and you can imagine in a system change like this, then I don't think you would want to be stuck in the existing system that's failing, right? With no way out of that system except for watch it slowly fail, right?
Yeah, we're struggling with the change in our exchange rate.
Of course.
Yeah.
Of course you are, because everything's priced to that same thing all over the world.
The US dollar.
And then the only way for you to create, besides tourism, the only way to create exports and everything else is to reduce the value of your labor versus it.
That's the driver.
And that's the driver. And so how could that ever work to be able to create financial independence? It couldn't.
So would you suggest then that there is a solution at the fiscal or policy level, or is it something that's really bottom up?
So it would take a really big, it would take massive leadership to be able to do this at a top down level, because you would be coming at that against the US, against the entire SWIFT system, against everything else, to be able to do that.
Yeah, the International Monetary Fund scolded El Salvador, of course.
And
they're going to default on their loans and all this.
Yeah, and all of those things are designed to actually keep the system the way it is. Like if you look at the International Monetary Fund, it actually might be the most, and this is terrible to say, but it might be the most criminal organization, right? because it keeps people in perpetual slavery. And it takes if you look at the actual numbers, Alex Gladstein has done a lot of work on this. If you look at the actual numbers, so you're giving a loan to somebody to revalue their currency and choose which industries, that a lot of that loan gets paid to multinational corporations outside of your country.
Yeah.
And then you have to pay back that loan against this. So it's an extraction of wealth. It is not, but people think it's saving them. And the more and more you do those loans inside that existing system, the more and more you're trapped inside that existing system. The point of Bitcoin is you don't have to pay for it anymore. Everyone else is going to pay for it. You don't have to. Choose not to pay for $400 trillion of insolvent debt and start pricing your time. But at the top down level, many of the politicians at the top would be inside that system.
That is certainly the case right now in Costa Rica. So yeah, absolutely. So we only have a few minutes left. Nancy Quiros, she's a professor here at ULEAD in crypto and blockchain. We often talk about the fact, and you've heard the maxim, that talent is distributed evenly around the world, but opportunity is not.
I wrote it in my book.
So given that maxim, I believe holds true, and that is certainly true here in Costa Rica, a wealth of talent, but opportunity often is not here. How would you suggest that we revert that trend? What helps make our talent more valuable? And finally, what should our universities be investing in terms of education around the themes that we've been talking about today?
Do more of what we're doing right now. And by the way, Bitcoin changes that I just wrote this in something, maxim. It changes it. So you could say the maxim is opportunities sort of talent is widely distributed, and opportunities are not. And now talent and opportunities are widely distributed. To be able to see, but they're only widely distributed on a system that allows them to be widely distributed. And literally every single person, if people did more work on this and got to see what I see and all of the value that's coming, it would be hard not to get really excited about where the world's going. But everyone has that choice. Every single person on the planet actually has that choice, because this is an open monetary network that nobody can stop.
And so what should we be educating about in our university? What would be sort of the next best course, or a bachelor's degree or master's degree? What is it?
Well, I would say right now most of the education is probably in most things are
Feeding the existing system.
Feeding the existing system. And so it would be really hard to see this. And even when I hear blockchain crypto, I hear feeding the existing system.
Okay.
If
that's our challenge. That's our challenge.
If I'm being honest, that's what I hear. Okay, well, there's a whole bunch of people that care about this topic, and that topic's been conflated by all of the money. Let's teach somebody and it's not teaching them. It's going exactly the opposite way. It's actually making the existing system stronger and making them, putting them in worse shape. I hate that I said that, but that depth of what, if a transition of the system was like this, like just take, even if you didn't believe anything, if it meant that much, if it was that big, if the stakes were that big, you'd probably want to do a super deep dive to make sure you were right. And I've tried to disprove my hypothesis. I tried to disprove Bitcoin over and over from every attack vector I could. I did not try to prove it. I constantly try to invalidate it, and I can't.
On that note, we will try to do better, Jeff, here at the Lead University, and what we're going to be educating as we move forward. We're actually designing some new programs now. One is digital business, and I need to rethink a little bit about what that means. Jeff is the author of The Price of Tomorrow: Why Deflation is the Key to an Abundant Future. This is available literally everywhere. Please go out and buy his book. We mentioned the article, jeffbooth.com. That has to do with, can you remind us of the title?
Sorry, jeffbooth.ca.
Jeffbooth.ca.
Yeah.
The title of that is the article, Finding the Signal in a Noisy World, if I'm not mistaken.
Yeah.
I put the Medium link in there as well. It's a great read. Jeff Booth, I just can't thank you enough. It's been a delightful conversation. Please join us again here at Lead University for more conversations like this.
Thanks, Paul. My pleasure.
Thank you. Have a great day, everyone. Thank you for joining us from ULID, Camtic. Un gran gusto en hablar con Jeff hoy sobre el tema de las presiones de tecnología en la economía, el efecto deflacionario y el rol de Bitcoin. Muchas gracias a todos. Que tengan buenos días. Thanks again, Jeff. Cheers.
Thanks.
Bye now.